Most people forget this now, but for years, crypto felt like trying to unlock a door with the wrong key. You'd hear the buzz, Bitcoin, blockchain, then hit a wall of confusion. Too many platforms, too many risks. One wrong move, and your money, gone. That's where the story of 21 Shares begins. Not in some flashy boardroom, but in a living room. Two founders, one simple question. How do you help the people you care about step into the future safely without fear?
They were looking for an easy way for their mothers to invest in Bitcoin. And back then, they quickly found out that it's pretty hard to get exposure, especially if you're more a traditional investor.
That question didn't just start a company. It sparked a mission to make crypto safe, simple, and accessible for everyone. From that living room, 21 Shares would go on to launch the world's first physically backed crypto ETPs, expand across Europe, the Middle East, and the US, and build a global platform rooted in regulation and reliability. They never tried to be the everything in finance. They chose to master one thing: safe access to digital assets.
We at 21 Shares, we have a almost 8-year-long track record. And all we do is crypto ETPs and ETFs. So that's solely what we focus on.
And that focus matters most when markets break, because crypto doesn't test companies during the quiet months. It tests them during chaos.
But I think when the market is really under stress, we have a major Black Swan event, for instance. That's really when it's the moment to shine. And that's when you see the difference on how those issuers manage their risk in the back end.
That's the part most people never see. The operational work that keeps products stable, compliant, and functioning when the systems get very volatile. And that's where years of crypto-only experience shows up. And for many people, stepping into this space for the very first time, that experience removes the fear completely.
Of course, the beauty is that with an ETP or an ETF, you basically buy it as just like any other stock, like any other ETF. You have your existing brokerage account, you type in an ISIN, and you get exposure. You don't have to worry about private keys. You don't have to worry about a separate account. Even taxes are easier.
That's why 21 Shares exists, to take something powerful, chaotic, fast-moving, and turn it into a safe, clear path for anyone ready to explore, learn, and invest in their future. Today, we're joined by Adrian Fritz, Chief Investment Strategist from 21 Shares, and one of the minds who translates the entire industry into clear, actionable insight for people stepping into it. He takes us inside the 21 Shares story, where it began, how the team operates, and what it takes to build the infrastructure that supports millions of new investors entering digital assets for the first time. Stay with us, because this conversation reveals how crypto becomes accessible at a global scale, and the team quietly engineering that transformation. Quick disclaimer, guys, this video is for informational and educational purposes only and does not constitute financial or investment advice. Always do your own research and, of course, consult a licensed financial advisor before making investment decisions. And one more personal note. For those of you who know me, you guys know that I personally advocate for self-custody. If you're confident in managing it properly, that means understanding how to protect your keys, how to set up wallets, avoid critical mistakes, exchange your fiat for Bitcoin, use exchanges, and take full responsibility for your assets. But here's why I'm sharing this interview. I still have friends and family who are curious about Bitcoin, Ethereum, all of it, but the complexity holds them back. They want in, but they're scared to make the wrong move. So even if you're not the right fit for a product like 21 Shares, maybe someone that you care about is, because years from now, the worst thing to hear is, I wanted to buy back then, I just didn't know how. And I've heard that way too many times. All right, guys, without further ado, let's dive into this. Let's welcome Adrian to the stage. Adrian, welcome to the channel. Great to have you here. How you doing?
I'm doing great, Kaya. Thanks for having me.
Yeah, my absolute pleasure. Excited for this. Can you give those watching kind of an introduction to, who is 21 Shares? And I hear there's some sort of kind of very personal story behind the way it came to be. And what do you guys do?
No, absolutely. I mean, 21 Shares, we are a global ETF and ETP provider for crypto. And yeah, what we basically do and the value proposition that we offer is that we make it very accessible, especially for traditional investors, to get exposure to crypto. And yeah, I mean, the story, as you mentioned, it kind of all started almost 8 years ago. Our two co-founders, they came together. They both, met in Stanford where they studied. And actually, they were looking for an easy way for their mothers to invest in Bitcoin.
Mm-hmm.
And back then, they quickly found out that it's pretty hard to get exposure, especially if you're more a traditional investor. And that's how they came up with the idea of launching ETPs or ETFs. They've been looking around the globe where to settle first. And they start building their business in Switzerland because it was the most forward-looking regulation. We are a Swiss-based, born and raised in Switzerland. In 2018, we launched the world's first physically backed crypto basket ETP, as well as the world's first physically backed Bitcoin ETP. And since then, we've been, kind of expanding around the globe. We now have over 50 products in Europe. We expanded to Australia, the UK, to the Middle East. And of course, since beginning last year, we also have ETFs in the US. So it's been quite a wild journey.
I'm curious if, what year did you get that Bitcoin ETP established?
2018.
Okay. So, how long after it was established did the co-founders' mothers deposit?
I think right away, basically.
So, what month was that approximately?
But that I don't know, to be really honest, what exact month that was. Okay. Yeah.
If it was later in 2018, they'd be in a really good position right now. If they, that's.
I think they're in a good situation nonetheless, right? If you invested in 2018, if you hodled through, should be quite nicely, even though it hurts right now looking at the charts.
Yeah, but I mean, exactly. Even if it was a top in, late 2017, early 2018, that's still 19K at the top. But if they bought any time later in 2018, it's very, very, very good returns. And I'm glad that they were able to do that. For my mom, in 2015, I got her to, because I've been in Bitcoin since 2012, and just trying to show this to my parents as hard as possible. There was a time when one of the core Bitcoin developers, his name was Mike Hearn, he put out a blog post, and he was one of the core respected developers of Bitcoin. And he basically came out with this very negative post saying that Bitcoin's over, it's a failed experiment, it's never going to work, blah, 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 blah. And I think that as soon as he dropped that post, it was a huge sell-off. And I know that Bitcoin got down to like $180, and I literally physically went to my dad's house, physically went to my mom's house, and I said, "You guys have to buy Bitcoin right now," and just like the biggest sense of urgency, they probably have ever seen me. And my dad just didn't, and then my mom tried to. So she, the way she does, she got on like Coinbase and tried to transfer, but then she couldn't figure it out, and then so she never did it. Right then, but eventually in 2015, she was able to, through Fidelity, roll her Bitcoin IRA into, normal IRA into Bitcoin, and that was really cool. So I definitely empathize and think that's an awesome story.
That's hilarious. But Kyle, let me ask you, what was your investment pitch back then to your dad? Like, how would you want to convince him to give you money to invest in Bitcoin?
Well, no, I wanted him to invest his own money in Bitcoin. I already had a lot by then, but I wanted him to have some, even if it was just a small amount. But at $180, he could have spent $5,000 and been set today, But I don't remember what the pitch was. It probably explained something like they didn't understand it for the longest time, even when I first got into it. And then, but I had been really like bothering people around me to where like I almost felt like that pyramid sales guy, right? Where like you start, like the only way to make money is to try to sell your friends a product, and they're like, after a while, they stop responding to your calls and stop, like they're like, dude, just stop trying to sell me this thing, And so I had to back off a little bit, but by that time, I really encouraged them. The sales pitch was probably just like, Dad, this has just happened. Like this really important person in the industry said something negative. He's definitely wrong. We have a huge price correction, and I think that you should really take whatever free cash you have around and at least put some of that into Bitcoin right now. Something like that.
That's an amazing story, because my Bitcoin journey started in a similar fashion, I would say. I also found Bitcoin in 2011, 12. I was still a student back then. And one of my best friends, he was a computer science student. And he was just very curious, I don't know, browsing around the web, the dark web. And that's where we basically bumped into Bitcoin. So I read about it and I was like, okay, it's limited supply. So it was very intriguing. And I also approached my stepdad back then and I was like, hey, listen, there's this digital currency. It's limited in supply and more people need it. We should buy some. And Bitcoin was at around $2.50. But I never invested any money whatsoever. So I kept on watching it and I kept on sending screenshots to him until eventually, when Bitcoin was at around $800, he sent me a bit of money. I invested it, and a few weeks later, the entire market just absolutely crashed, and I lost 80%. I sold. I panic sold. I think I lost 80%. I gave him back the remaining 20%. And back then he told me, I told you so. You shouldn't be investing in some weird magic internet money. But yeah, that was kind of the start of this love-hate situation with Bitcoin. It was definitely the reason why I studied finance, why I got hooked on financial markets, and eventually started working in crypto as well.
Yeah, it's amazing how Bitcoin gets brought to you by your friend or something, or the YouTube channel that you watch or something like that. And initially it's positioned, at least from my experience, maybe not in my circle, because I really grew up around, once I got into it, like I also discovered it in 2012, also from the dark web, also the place that most early people learn about it, but don't say it publicly, right? Like, yeah. So and that's the point where I understood just the first time I ever learned about the dark web and what it was, and the whole thing, that whole experience blew my mind. Like, what? This is eBay, and it takes this Bitcoin, and like it's anonymous. Like, what's going on right now? How come I can see this marketplace and know, and like it's still up? Like, I didn't understand any of it. But it got me to like be aware of it. And then by 2013, I became very aware of it. And it's interesting how it takes a lot of people from this path of like really having no idea how the monetary system works, the debasement of the fiat currencies, to really starting to understand like why this is significant. And then for a lot of people, it takes them far beyond that, and they go down that rabbit hole of Bitcoin versus gold, and how the money machines actually work, and these kind of things. And so just the initial introduction, maybe it's from a trader who says, hey, we should trade this thing, to someone who's actually like believes in long term and wants to hold for a long period of time. So I mean, in my opinion, it's the best asymmetric risk that anyone can get their hands on. Still today, I still think today it's the best asymmetric risk for capital growth or preservation from anything else. Unless you get really super lucky in buying the next NVIDIA, a couple of days after IPO, and looks like a company that just makes accelerated cards for computer games. I didn't realize it would be so valuable in the future. But yeah, so good background, very, very similar, except for I wasn't trading, I didn't sell mine, but I spent a lot of it, because remember, I didn't have any I was then an aspiring entrepreneur, and I didn't spend anything. I spent a lot of Bitcoin trying to grow businesses, right? As just like at much lower prices. And my own version of the pizza story is that, I bought a Harley for myself for my birthday in 2015, and it was 14 and a half Bitcoin. So yeah, but like I wanted to go buy that Harley with Bitcoin. Like I wanted to really kind of live in that life. And looking back, I think that like I have a much lower net worth than I would have had I hodled everything. But I love the experiences that I've gone through, and just that kind of life story that's being told from all of these experiences that allowed me to do. So yeah, so for the long term, really, really good hold. I guess that makes me come to a kind of natural question here is, we're seeing a lot of outflows right now from, the ETFs. And I'm curious, like, what kind of onboarding do when you guys get someone that comes and says, "Hey, I'm interested in exploring this Bitcoin ETP or ETF. Can you tell me some more about it?" Like, do you, and also like what mix of customer is it? Is it institutions? Is it just like high net worths? Is it just accredited investors with a little bit of money? So yeah, like, is the onboarding experience an educational one where you say, "Hey, look, like it's very volatile," and show them market cycles in the past and say like, no, I can't, like, maybe you guys can make financial advice. I don't know if you're financial advisors or not, but like, like expect volatility and try to remain calm because look at the history and it's expected, and it's, that kind of thing. Because my assumption right now is that a lot of the outflows are coming from more the tourists, right? The people who like, maybe they're not the institutions who've done an epic amount of research before putting billions of this into this stuff, and they know about it, they expect it, they're fine with it, and they're still holding through it. Versus the ETF outflows we're seeing right now, maybe they're coming from more newer participants, people who just kind of winged it. What are your thoughts on that?
I think you hit it on the nail when you said it's mostly educational, but I would say it changed slightly over the last couple of years. When I started at 21 shares, I would say, yeah, the majority of clients were, as you mentioned, high net worth individuals, some accredited investors, a lot of family offices, because they are usually a bit more nimble and they can take quicker investment decisions, and they're open to new technologies like that. But then also kind of like private banking, independent asset managers. But yeah, and of course, a big amount of retail that still invests in these ETPs and ETFs. The journey in regards to onboarding, 100% all about education. And it gotten better, but you would be surprised how many people are still at the very early innings of the crypto journey. And it takes a lot of patience, but you really got to take them by their hand and help them navigate through this new asset class. And that comes with explaining what a blockchain is, explain why Bitcoin was created in the first place, how it works, its monetary policy. Then, of course, face a lot of the misconceptions that are still there to a lesser extent, but they're still there, kind of like it's only used for criminal activity. It can be hacked, all these kind of classic FAQs that we need to address on a daily basis. The good thing and the very rewarding thing about this job is that usually if people are intelligent and they spend a bit of time educating themselves, at one point they start to crack, and a lot of times they do a 180 as well. So I have plenty of examples where we met clients 4 years ago. We spoke to them on a biannual basis, and this year they finally made an education. But the first time we met them, they were like super skeptical. They maybe just took the meeting out of courtesy, but over the years they really started to appreciate this new asset class.
What percentage of your clients right now in Bitcoin ETPs or Fs what's the client mix right now? Like approximately, what percent in retail, what percent in corporations or big institutions, and then I guess we could say family offices maybe, but I'm trying to understand the mentality behind the customers and just the ratio, the weight of how much each one holds.
Yeah. I would say it's still the majority is retail. I would say 70% retail, 30%
Wow, 70% retail.
leaning towards institutional investors. I know that over the last year, we've seen some bigger announcements by pension funds, by some sovereign funds, but also, for instance, university endowments. I think it was a big surprise that Harvard, for instance, they increased their Bitcoin allocation, and it's now actually their biggest holding. So the institutional adoption is clearly ticking up, but as of today, it's still mainly retail driven.
Wow.
Another big segment that I would point out are just hedge funds. So there's been a trading opportunity called the basis trade, basically capturing the premium on the future market.
Right.
So what a lot of people do is they short the CME while using ETFs for the long leg, and like this they're able to capture quite chunky yields on a delta neutral basis. And you see that if this basis contracts, you see major outflows and redemptions because those hedge funds retreat.
Yeah, I see that right now. I always just check Velo .xyz/TradFi to check. We're looking at like BTC CME annualized basis premium, right? Versus and yes, so they're basically trying to beat the risk-free reward, right? The risk-free rate, which is treasuries and stuff.
Exactly.
So right now, the premium's at 6.7%, and I guess that you can get a lot of closer to risk-free things around 5% or so, 5.5 maybe.
Yeah. I mean, at times this premium was above 10%, and then you see a lot of creations because then it makes economically sense. It all comes down to opportunity cost. But you're 100% right. That's basically how they weigh the pros and cons.
Yeah, I talk about that a lot on the channel. As far as usually when we see ETF flows coming up a lot or out a lot, it's a huge indicator of exactly what's happening. It's those basis trades. How do you deal with potential customers that are shopping around the same way that one person might be looking at a bunch of different car manufacturers, but they all kind of have their like basic model, their premium, whatever and when you talk to someone that's interested that says, "Hey, yeah, I've checked out these other issuers too, and this is what I like, what I didn't like, blah blah blah." Like, how do you tell them that? What do you say about 21 Shares that differentiates you versus the others?
That's a very good question, and it certainly has become more competitive, especially over the last 2 years, because obviously we now have big traditional heavyweights in the ring as well. And therefore this question pops up quite a lot. So how are we different from like those traditional asset managers? And I would argue that we at 21 Shares, we have a almost 8-year-long track record. And all we do is crypto ETPs and ETFs. So that's solely what we focus on. And from the outside, if you look at on screen and you're trying to buy an ETF, you might not see the nuances that go into it. But managing these things and crypto assets from an operational level, it can be very challenging. So just to give you some examples, for instance, and you won't see that on screen, and that's a big difference to equities as well. Let's assume something happens with a Tesla car, for instance, or internally. Usually it doesn't really affect the security or the stock, aside from maybe some price movement and volatility. If anything happens to the underlying blockchain, it directly impacts the security or the ETF. The best examples are we've seen migrations, we've seen forks, there are airdrops, there are a bunch of corporate actions that have to be dealt with in the back end. And I would say we clearly have the best track record when it comes to that. Just to name an example, when the Ethereum merge happened, for instance, of course, we had a split, a fork into Ethereum and then Ethereum proof of work. But you were also eligible for an airdrop in ETH POW token. So what we basically did within 24 hours, we do work together with multiple custodians, but one specific custodian, he supported the airdrop. So what we did is we moved all the asset to that specific custodian. We claimed the airdrop and we moved it back to the original place all within 24 hours. And therefore we were able to claim the airdrop, sell it off, and gave the ETF performance or the ETP performance an additional boost. And this boost was between over 1.5%, which basically paid for your management fee. And I know that's very nerdy and geeky when it comes to the operational backend, but I think that's truly where we have the experience and expertise.
Yeah, that's pretty interesting because I do remember that there were some other instances, I think, in the past where you had these situations with either exchanges or I don't even know if when was that again? That was like, it was before US ETFs were around. Yeah, obviously that was one. But I think it was with exchanges or something like that. And some of them did distribute the airdrops or the fork to the users, and some of them didn't. And that tells a big difference about kind of the customer care and also fairness of what's going on. And also,
absolutely.
Also, if that's what the platform is willing to do, then there's obviously an intent to do what's best for the customers.
100%. And I think it's becoming more and more important, especially now that we see a plethora of altcoins flooding the market. And of course, in Europe, we've been having those kind of products for over half a decade. And therefore, we already built the track record how to manage those. And it's definitely the little things. I mean, staking, for instance, is another big feature that needs to be handled, and it comes down to risk and liquidity management. Because think about it, for Ethereum, for instance, there's an entry and exit queue. So let's say you basically can't really stake 100% of the assets, because you always got to make sure there's enough liquidity to guarantee redemptions if there's a large sell order hitting the market. And those have to be managed in the back end, basically. And different issuers take different approaches.
Are you guys already doing staking in with like ETH or Solana?
Yes, in Europe we've been doing it for many years. We have a bunch of different staking products. And that's why we definitely built this operational excellence and know how to deal with it. And of course, the good thing now is that we can carry over this expertise to the US market. Yes. I know when it comes to branding, we have a lot to do. That's why we want to put our name out there. But when it comes to the operational experience, I think we can definitely play along.
For a product like Bitcoin, correct me if I'm wrong, but it seems like a very apples to apples kind of like, okay, I give you cash, you give me claims to Bitcoin shares or whatever, and then like I redeem them when I feel like it. And there's not much active management happening as far as I can tell on that side. Like it's the equivalent now of like a new Bitcoin treasury company trying to compete with Sailor or something versus the Gen 2 DATs that are now working with ETH and Solana and things like that can earn revenue. I guess from a layman, they would probably look at this situation and say, Well, cool. You guys have done like isn't staking ETH kind of very similar across the boards? And once the US is fully open for it, I see like all these other issuers like BlackRock and Fidelity and others, and you guys also is pending on the status of that staking. But once it's open and good, is there really that much of a difference in how you manage those stakes that benefit the clients? And what maybe you can just say kind of the things that you've learned, or how you think, maybe two examples of like a company that's just staking and just making sure they have enough reserves versus someone who's actively managing and attempting to outperform the other competitors.
Yeah. I mean, the big issue, there's not really a standard on how to deal with those things. That's why every issuer has basically their own approach when it comes down to liquidity management, but also risk management for staking. I think in layman, like if you look at it from the outside as a normal investor, you don't really see the difference. And usually when markets are normal, when they're going sideways, when they consolidate, or when we're in a bull market, everything is fine as always. But I think when the market is really under stress, we have a major black swan event, for instance, that's really when it's the moment to shine. And that's when you see the difference on how those issuers manage their risk in the back end. So yeah, I think in the long run, maybe some other issuers, they provide better yields on paper, and it's all good because we're in a bull market or we're just going sideways. But when hits the fan, then definitely we might see who has the better risk management.
Yeah. Okay. So tell us a bit about the other kind of products that anyone watching this can go check out. Like you were telling me before that you guys have research that people can read and access. And is there anything else they should be aware of?
No, of course, research is a core pillar of our business. Once again, usually that's how we help those traditional investors find their way into digital assets. And also when it comes to research, it really depends who you are talking to. It's important to adjust the pitch, adjust the language. It's quite funny. A lot of time if you sit on those meetings, maybe you sit in front of an asset manager, the head of is super skeptical, but they might be bringing their junior because it's really enthusiastic about crypto, and they start asking very challenging questions, very technical. So you got to be able to answer those. But other times it's just a private banker, for instance, and you got to keep it very high level and simple. And other times it might be a portfolio manager that usually don't really care about the underlying tech. They just want to see how it fits in my portfolio and what the diversification benefits are. So yeah, I think when you check out our research, we definitely provide a variety of different angles to make sure we serve the space. Aside from our products, once again, of course, we've also just launched Solana in the US. We have Bitcoin and Ethereum. We also have baskets now, basically, cool. For instance, the top 10 that should get easy exposure, ranked by, or basically the methodology is just by market cap. And beyond that, of course, our European offering is way bigger. Here we also have a big breadth of altcoin offerings, from Uniswap to Ondo to Canton, or some other multi-asset baskets that are quite interesting.
Yeah, those are very interesting, and I think eventually those will probably be the most dominant ones. Those indexes. People like
absolutely. We have in Europe one product, without mentioning the ticker, of course, but like we're combining Bitcoin and gold because of course there's a lot of whispers. It's kind of like Bitcoin is the better gold, or just Bitcoin versus gold. But we actually think they have a beautiful symbiosis, the two of them. And if you combine them, because they have a very low correlation to each other, you have the most liquid alternative assets on the market. And if you put them together, they perform quite nicely.
I think that's a really interesting idea. I would buy it. I would buy it for sure.
Good to hear, Guy.
Yeah. So, okay. So now that, basically we have a good overview of 21 shares. Just can you explain to the audience, because I believe last time I looked at the analytics, about 50% are American. I think some other high percentages from the UK, another third highest would be Australia, and then like the rest from everywhere else. So how does anyone, can anyone from any jurisdiction participate in any of your products, or do they have to go to jurisdiction individual kinds of routes? So yeah.
I wouldn't say there's a perfect answer to that, but generally speaking, you can only access those products in your jurisdiction. Aside, of course, maybe you're an accredited investor or you have a different legal setup, but usually you get exposure or access to the products where you're at. Therefore, if you're in the US, usually it's the ETFs. In Europe, it's the ETPs. But yeah, that's basically it. But that's why we're trying to expand globally, of course, because we want to make sure we serve the world, and in any jurisdiction, you have some sort of access to crypto assets.
Okay, cool. I see on the website you've got, like, I'm default to US, but you have Europe, United States, Switzerland, UK, UAE, rest of the world, and Brazil. Cool. So you got products in all those places. That's nice.
Exactly. UK also just opened up for retail investors, which we're quite excited about. Obviously, everything dwarfs compared to the US market, but we think in the UK it could be the biggest market in Europe. So quite excited about that.
Do you think that the reason that retail buy your products is because they know that they want exposure, but like the whole idea of self-custody is scary to them or something? Like, I don't understand. Like, using any ETP or ETF, there's like fees attached to that. So, and for someone like me and my friends, we're very comfortable using crypto technology. But would you say like that's the biggest reason that individual or retail would buy those kind of products?
I would say it's one of the reasons, absolutely. I mean, once again, we at 21 Share, including myself, we're not opposed to self-custody. That's absolutely in the spirit and ethos of Bitcoin and crypto as a whole. So anyone who's able to jump over that technical hurdle should go for self-custody. But it's exactly that responsibility that might freak out a lot of people. Of course, the beauty is that with an ETP or an ETF, you basically buy it as just like any other stock, like any other ETF. You have your existing brokerage account, you type in an ISIN, and you get exposure. You don't have to worry about private keys. You don't have to worry about a separate account. Not even taxes are easier, because by the end of the year, you just get a tax statement and it's very easy to handle. So that's a lot of reasons why I think retail, but also all the other clients like family offices, private banking, they prefer ETFs out of convenience. And I also ask my friends, I have a lot of friends, having a lot of Bitcoin and self-custody them, it's a lot of responsibility, especially if you don't have the technical know-how. I always tell my friends, imagine you have 20 million, of which 10 are from your family. Would you self-custody the entire thing? Some might. Me personally, I might even, but maybe I want to have a bit of that in ETFs just to have ease of mind and someone to call if something goes wrong.
Adrian, is there anything else that you want to talk about that that we haven't yet? And also, how can folks find out more about 21 Shares and talking to someone if they want to?
I mean, just feel free, of course, check out our website, 21shares.com. Also follow us on the socials, 21 Shares, or myself even, Adrian WJ Fritz on X. But yeah, if you have any questions, of course, any doubts, any feedback, feel free to reach out. I'm always happy to have a chat.
Cool. And we will put all of those links in the description below as well, folks. Adrian, thank you so much for your time and insight. Really good conversation, and hopefully we'll have you back in the not too distant future.
I hope so too. Appreciate the invite.
Yeah. Bye-bye.